In the FX quadrant, taking a look at the June Japanese yen, which falls for its fourth consecutive session. The total drop since the rotational high made on March 8th is about 1.9%. And looking at the chart on a weekly basis, the yen finishes the week down about 1.43%. That's the first down week for the yen in the last three, but it's the ninth down week in the last 11. Now you look at the high 68.52, that was only up about 17 basis points, so just short of 0.2%. The low, however, 68 even and a half, that was down almost 0.6%, and we finished down about 53 basis points, so a little bit more than 0.5%. Next week, we have a Bank of Japan meeting, and the Bank of Japan, according to markets, is expected to end ETF purchases, something they've done for a while to try and support the stock market, and discuss ending yield curve control. If they disappoint the market at all, you could see a continued sell-off of the yen, the kind of sell-off that we've seen over the last, let's call it 6 to 8 months. If they actually satisfy the markets, you might see a rally continue that we saw over the previous 2 weeks, obviously not including this week. So we'll have to keep an eye on that as yen watchers and traders. Also looking at US yields, yields moved much higher on the week, strengthening the dollar, especially against the yen. On the week, the 2-year was up 24 basis points here in the US, 5-year 27 basis points, 10-year all the way up to 431, 22 basis points, and the 30-year up 17 basis points. And today they were up between 1 and 4 basis points across the board in the US curve. So that again strengthened the dollar. That also obviously puts pressure on the yen. So we want to keep an eye on what the FOMC does next week as well, and how its relationship and the relative value happens with the dollar versus the yen.